But just to give an intro to him and who he is, a lot of you maybe have seen him leading these webinars, like I've said, but he's the founder and owner and current CEO of our company. He's helped clients save over 250 million in taxes in the past. A fun fact about him, he was a professional golfer before starting XIT CPA. He's the founder of CPA Solutions, which is an Inc. 5000 company. He's been featured on CNBC, Bloomberg, Fox Business. And his approach is all about building custom tax and wealth strategies. So we don't want to give the cookie cutter thing that quote unquote works for everybody, because everything works differently for everybody in their different situations. And that's why we've got these webinars. So with all that being said, you may have questions that come up as we're going through this deck. Feel free to send them in the little question and answer box. There should be a button at the bottom of your screen where you can send those questions. They'll get sent to me and to Jeremy, and we'll answer those at the end of the presentation. So feel free to type those in as you come up with them. I don't want anybody to forget any questions, but we'll be able to address all of those at the end. So with that introduction, Jeremy, take it away.
All right, thanks, Sophie. And hopefully you can see my screen.
It looks great.
What we're going to talk about today is not a tax strategy. It is a cost reduction strategy related to life insurance. So a little bit different than what we currently cover here. But I was really impressed when this came to my attention and wanted to share it with you all. And it's an opportunity to maybe help you guys all understand a little bit better that we're not just here to solve your tax pain. I mean, that's what most people come to us for initially is tax pain, but we do have access to many resources like this as part of our virtual family office model that we are moving towards. Our goal long-term is to be able to have an advisor that understands your entire situation, from tax to accounting to insurance to wealth management to estate planning to asset protection strategy. We really want to help you all with that. Our ideal client is oftentimes trying to act as their own quarterback and coordinate all those people and teams, but our ideal client would be interested in learning more how to leverage us and our resources, whether it be internal or external, so that they can move closer to their wealth dream, let's say, which encompasses all of those factors that I described previously. So with that, talk a little bit more about a unique cost reduction strategy for life insurance and why you might be interested in that. There's the things that we're going to cover today. I really appreciate the warm welcome that Sophie provided us. And we're going to have about, this probably won't take more than like 15 or 20 minutes. So let's get digging into the details here. So this came to me from the due diligence project. And as a reminder, for those of you who aren't familiar with the due diligence project, it's a network of about 500 primarily CPA firms. They're not all CPA firms, but most of them are in the tax space and working with clients who have a lot of tax pain. Typically, all of our clients that would be interested in these type of strategies are experiencing the highest marginal tax rate, and we've discovered and we've aligned ourselves under the idea that the tax code is really a series of incentives for entrepreneurs like yourselves to do the things the government wants you to do. And once you understand that of the over 1 million pages in the tax code, 99.9% of them pertain to how to reduce tax legally. And a fun fact here, like only 20% of the Fortune 500 firms are able to zero their taxes. And I would argue that we are among that 20%. That's why we're here. That's our passion. And that is where I got the idea for this strategy today. So when we're talking about insurance, there's a couple things that you need to keep in mind. There's really there's two types of insurance: term and permanent. And most people are underinsured. So it's kind of a scary statistic that 99 or not 97% of life insurance policies or term life insurance policies never pay a claim. So people are paying premiums and they never receive the benefit for that simply because the term expires before they need it. The alternative is, of course, permanent life insurance, where you're guaranteed to receive a death benefit. It's almost like a bank account. It has cash value. It's liquid, and it can be used for things like even while you're alive. But most people opt for term life insurance just because it's cheaper. But you really got to ask yourself, like, is it really cheaper, knowing that it's going to likely expire worthless in 97% of the cases, or the policies that are written expire worthless. So most people don't like to talk about life insurance. It has to do a lot with your mortality, and of course, that's always a sensitive subject. But it's inevitable, and we all have loved ones that we want to set up well when we're gone. And life insurance is something that I would recommend everyone have as part of their wealth strategy. And this is one of those options today. If you're among the majority that is uninsured or underinsured, this cost reduction strategy might be something that will get you excited about learning more about life insurance, and start that ball rolling with the due diligence process, verifying your insurability and things like that, knowing that there's not going to be a big price tag on the end. So the question here at the bottom is really what got me excited about this. What if there was a way to secure $10 to $65 million in coverage for 3 to 5 years with no out-of-pocket cost, no tax liability, and no obligation to continue? So that is what these clever people did who are in the insurance industry that we're talking about today. So how it works, essentially, it's premium financing. So that's the first thing you need to know. It's up to $65 million without additional restrictions. You can go over that $65 million if your income or net worth would justify it. But even if it does justify a policy in that amount, there would be additional restrictions once you get past that $65 million mark. So it's not a hard stop, but it becomes more challenging once you pass that. So that's the first thing you need to understand is there are limits to how much coverage you can get under this program. The next piece you need to understand this is a premium financing program. That's really where the magic happens. There's a specialized lender out there that pays the premium. The agents that are writing the policies generate commission greater than the premium. That's the key. Then the commission is used to pay back the lender with interest. So at this point, you can see how it works. Like, everyone's getting paid here. Like, they've structured this in a very unique way that allows the bank to get interest on their loan and the insurance agent to get commission on selling the policy without having you as the insured come up with any premium up front. Essentially, the insurance agent and the bank is taking all the risk. It's a 3 to 5 year period. There's no obligation for you to continue after that. But there'll be a decision to make. Like, do you want to continue after 3 to 5 years? Because the amount of premium financed only covers you through that amount of time. So, I mean, of course, the insurance companies who are writing these policies and taking the risk, I mean, they want you to continue, but they're writing it in such a way where you're not obligated to continue. So they're taking the risk in this case, which is pretty unique. And it's a win-win-win. So that's why another reason why we're talking about it today. Yeah. All right. So just to reiterate some of the highlights here: no personal loans, no liability or repayment obligation. As I was saying earlier, there's no risk of the policy being canceled in the first 2 years. After that, there may be some potential where the insurance company could cancel it. That's a question that you would want to ask the specialist if you decide to pursue this further and learn more about it. We can connect you with that person. They would have answers to what that cancellation risk might look like after the second year. Of course, just like any insurance policy, there's going to be some medical underwriting required. That is going to take time, of course. Typically, the fastest turnaround would be 30 days. Typically, it's going to be more like 60 days to get it underwritten and the policy in place. But once it is, like, you have full death benefit, full protection in a worst case scenario from day one of the policy being in force of up to $65 million. And as a reminder, like, you literally put no money into this policy. Obviously, being dead isn't the greatest outcome, but your loved ones would be protected, and didn't cost you anything. So, this is kind of an example that we just talked about. When that worst case scenario happened, just to illustrate that the family receiving the full amount of the death benefit upon the unfortunate passing of this of the client in this example. So some more. So, like, for the right client, why might you want to consider insurance? I guess we're assuming that you're insurable, or assuming that you're willing to invest a little bit of time in going through the medical underwriting process. So what benefits might you get from this? So, like, this policy, if you decide to move forward with it, it would be permanent in nature, which means, like, it's growing cash value, or it would grow cash value if you decide to continue it after the 3 to 5 year initial premium financing cost reduction strategy has sunset or has fulfilled its obligation. You would be building an asset. This is permanent life insurance, which is different from term life insurance in that it's an asset. It has a cash value. After that 3 to 5 years, you'd have to be paying premiums on it, but you have the benefit of essentially starting the premiums on a policy that was based on your health 3 to 5 years ago. And for those of you that know anything about insurance, or just using common sense, we can derive that like, as you get older, the actuarial tables say that you're going to die sooner, which means life insurance gets more expensive. So if you decide to continue afterwards, you're starting with a head start. So there's some asset leverage involved. Of course, this could be a big part of your estate planning, or even an estate planning bridge. Like, while you consider other options, I have clients that are interested in looking at this. They don't know where to start with life insurance. This could be the bridge. It may not be the perfect solution, but it doesn't cost you anything out of pocket. You'll understand your insurability, and you'll have a framework to evaluate other insurance strategies that may present themselves as you're talking to maybe other people in your network, or people that are trusted referral sources from us. This could also pair with other strategies that involve charitable giving as part of your legacy planning. But I do want to make a special point here for those of you that have watched the presentation on the charitable holding company or the charitable LLC, or for those of you that have done that, you know that insurance is a part of that strategy. And I want to clarify that this particular insurance structure does not work with or in combination with the charitable holding company structure. I've already had a couple people ask me that. Just wanted to get it on record here. And of course, the benefit of optionality. That's always something that I find beneficial is when you're not locked in, you have an option. So this is going to be ideal for entrepreneurs with high income or net worth. They suggested that like $2 million net worth or more, they would love to talk to families with estate liquidity concerns. So what does that actually mean? There's a really nasty thing out there called estate tax. Not like the state of California, but estate tax, which is 40% tax that the federal government imposes on your assets as you go through the estate process at the end of your life, when the court system is deciding in the tax system is deciding where your assets should go or how they should be distributed to your heirs. The estate tax is going to be 40% on the net value of all of your assets at the end of your life. And most people are not prepared for that type of tax bill, or their families aren't prepared, or their estate is not prepared. And life insurance solves that problem in a lot of ways for a lot of people. But I will say the key to it is locking in a policy when you are healthy, and the sooner the better. Every year it gets more expensive, and of course, nobody should take their health for granted. I mean, just because we're healthy today doesn't mean we're guaranteed to be healthy tomorrow or next year. The succession planning, this could also be used for potentially some a key man or business succession planning, where there would be need for liquidity upon exit of a founder, perhaps, or a partner who no longer wants to be a partner and requires a buyout. Oftentimes, insurance is a great tool to use in those situations. And of course, parents funding generational wealth strategies. It's an asset that's going to grow over time if it's structured properly, and if you're working with a good insurance specialist that is called to a fiduciary duty, which the ones that we work with fit that description, they will walk you through how to do that in a strategic way. So what are the risks? There's not a whole lot of risk, really any risk for the insured with this one, which is awesome, but always like to put a risk slide in these decks, just because like that's really the factor for me and most of you when considering whether or not we should not only invest our money but our time into something. In this case, this is really structured to a situation where all of the risk is falling on the insurance company. But of course, there might be a risk of you not being approved for the policy. So just keep that in mind. Or you can't maybe substantiate enough income for them to structure the policy in a way that makes it a win for them. That might be a reason why this wouldn't work for you. And of course, it needs to be properly designed. So really, like, they need to gather some information about you before they can determine whether or not it's going to work. So, but what I'll reiterate, that there's no obligation until this initial phase of the premium financing has run its course, and you have total optionality at the end whether or not you want to continue. But during the 3 to 5 year period, you still have full rights to the death benefit in a worst case scenario. Of course, not intended for anyone with issues that may relate to health or liquidity, or they know that they're not insured. Like, this isn't a magic pill that they have where they can all of a sudden make you insurable. They're going to do traditional medical underwriting, just like any good insurance company would do. So what's next? I would be happy to make an introduction to those of you who are interested and provide the information that I have to get the ball rolling. Just reach out to the XIT CPA team here. Sophie will guide the way. I kind of think it's a no-brainer. I have them working on my application now. I wish I could qualify for 65 million, but not quite there yet, but that's okay. So I think this is cool. It's different than what we typically do with tax strategies, but hopefully you like it too, or some of you do, and this opens your eyes perhaps to some of the other ways that we can help you besides just with tax mitigation strategies. So we do have some time for questions if there are any. Excuse me in advance if I don't have all of the answers about the insurance. I am not an insurance agent, but wanted to give you my thoughts about this. We are focused on empowering entrepreneurs to realize, achieve, and live their dreams, served by world-class virtual family office teams. We do that by developing, implementing, and maintaining customized wealth and tax strategies, leading to multi-generational relationships in collaboration with experts in other fields. By 2030, we will have empowered 1,000 entrepreneurs to achieve and preserve financial freedom, including our team, for multiple generations. And this is a step in that direction, not just tax strategy. We're wanting to help you with more. So thank you all for your time and attention. Please reach out if you'd like to learn more. Have a great day.
Awesome. Thank you, everybody. Looks like there are no questions, so we'll just go ahead and end it now. Thanks, Jeremy, for that presentation.